NIO just reported this morning. They reported revenue of $1.83 billion, which beat expectations of $1.8 billion, but they missed on EPS. They lost 36 cents per share, and the stock market was expecting 29-cent loss, so missed by about 20%. Cash at the end of the quarter, $7.2 billion versus $8.1 at the end of last quarter. I have no comment on that because I haven't looked at their financial to understand why that is, but they're up 13% today. And why not, Mo?
Why not? Everything else is up, so maybe they should be up.
Yeah, so NIO is one of those companies, guys, where it's really early in it's really a young company. It's got a lot to do, got a lot to prove. And if you know us as investors, if you're not new to the channel, you know that we like to wait for things to kind of play out when they're too young and too small. If you're new to the channel, please continue listening to this video, watch the end, subscribe along the way, because we don't look at stocks as ticker symbols going up and down. We look at them as buying a piece of a business. We're going to talk about Amazon today in this video. And the reason being is there's some interesting things happening with Amazon fundamentally as a company that make me go, okay. So with NIO, big car manufacturer in China. Is it the biggest one in China?
I think it is. I think it is.
But let's pull it up in our software. So I'm going to go to NIO here.
Yeah, I'm not, no cash flow, no profit.
So their 5-year average free cash flow is negative $780 million. Their last 12 months are negative $300 million. But they're growing like crazy.
They are, yeah.
I mean, look at this, Mo. In 2018, the 12 months ended June, they did $6 million in revenue. Wow. And now they're doing $1 billion, $1.3 billion, 3.8, 5.5. I mean, they're losing lots of money. Let's look at their shares outstanding. Oh yeah, 60. And this is very rare for Chinese companies. 60% increase in shares outstanding. That's incredible. Analyst estimates. Let's go see what analysts are saying. Oh boy. Analysts are barely even, I mean.
Ooh, that's not a lot of growth. I was expecting way more than that.
Yeah, I was expecting way more than that. They're actually, that's interesting. How about revenue? Wait a second. So look at this, guys. Analysts are estimating their revenue to go from $57.7 billion to $371 billion. I don't think that's in our currency. I think that's in the Chinese currency, and only making $1.30. That's so to me, guys. I immediately look at this and think, I'm gonna avoid it. That's my initial reaction because I sit there and say, there's too much uncertainty out there. I mean,
this is all speculation.
So let's go look at the price to sales ratio because that's a very important factor in cars.
1.15?
Yeah, 3.15. So I'm going to pull up Ford. Ford's price to sales ratio, 0.37. GM. GM's price to sales ratio, 0.39. Honda. Honda's price to sales ratio is 0.39 also. Toyota. Toyota's price to sales ratio,
here comes the best comment ever.
0.81.
The trolls are going to come in. You're comparing this to
yeah,
Toyota.
I am.
Yeah, it's a car
Tesla, 7.8. So here's why. Volvo just announced their electric vehicle.
Yeah.
Ford's killing it electric vehicles and only getting better. That Mercedes. Guys, if you I'm going to tell you right now, if you think that comparing a car company to another car company is not the right comparison, stop watching the video.
I don't know what to tell you.
We have no idea what to tell you. It's a car company. Its margins are what they are. So what is the gross margin on NIO?
It doesn't matter how they get down the road.
16%. What's the gross margin on Ford? 15%. What's the gross margin on General Motors? 12.9. What's the gross margin on Honda? 20. So it's lower than Honda, a little bit better than Ford, better than GM. It's a car company. And the only thing that you're doing is saying, if you don't believe that NIO is just a car company, you're saying it's different this time. And those are the 4 most dangerous words in investing. My encouragement to you is to learn a process. Learn how to handle your emotions. Minimize your FOMO as much as possible. That's what we teach on this channel. With NIO, it could end up being the best thing in the world that ever happened.
Very well could be.
But if you always bet on that, you're going to lose a lot of money. You know, I saw Peter Lynch said recently, not recently, but he said in the past, I saw it recently, where he said, run away whenever somebody says, this is the next X. So NIO's the next Tesla, NIO's the next whatever. NIO, that's never, ever works out. It never, ever works out. This is the next Uber. It never works out. You just end up chasing we have a selection bias when we see these companies. You don't see the companies that failed along the way. Since 1900, the car industry has skyrocketed. And along the way, thousands and thousands of car companies have gone to zero.
Mm-hmm. Oh my gosh. I remember, what was it, 2021 when Buffett was talking about it on stage and he pulled up the list of car companies and it was like 3,000 that went to zero. And he's like, I just pulled up the M's here because I couldn't pull the entire list up. The M's that failed were the only ones that I could fit.
I don't know how many it was, but it was definitely hundreds at least.
I thought it was in the thousands. But either way, it doesn't matter. It's a lot and many that you've never heard of. There's so many car companies out there that are currently failing that you've never heard of.
Correct.
I mean,
look at Fisker. What's been going on with Fisker?
I don't know. Nicole's dad's still slanging out.
Oh, he has. Yeah, he does. I mean, Lucid just reported yesterday that didn't go very well. I mean, sitting there saying, guys, we look at buying stocks as buying pieces of businesses, and every investment's the present value of all future cash flow. So let's look at Amazon. The reason I bring up Amazon is Amazon is currently at a price. Well, forget about today.
Ignore today, but
well, even then. So let's go to 5-year chart.
Yeah, keep today in there. Doesn't matter.
5-year chart. The low on Amazon after COVID, when COVID hit, was $84. It's currently at 94. It was at 86 yesterday. Amazon just announced, guys, that for the fourth quarter, the busiest time of year for retail, they're probably going to break even.
With what revenue?
100. I don't know. I think I estimated like 150 billion.
That's insane.
I look at that. Well, let's go look at here what the analyst estimates are for the quarter. Let's see. For the quarter, they're expected to do revenue of $149.95 billion, $150 billion in revenue. And they're expected to break even. Now, these expectations here are 23 cents a share in profit, but they've warned and said recently, like, hey, we think we're going to be about break even for the fourth quarter. That's 150 crazy. Billion in revenue. Guys, how much more can it grow where you're like, at some point you guys start getting your cash flow out of it. Right?
And I mean, it's been a long time and it's an established business. This is incredible to me. I pointed this out to Paul yesterday. This was COVID right here. These were the lows of COVID. And look where we're sitting. We're sitting, well, today, I mean, it's up 10% today. But outside of that, yesterday, we were sitting at those COVID lows, which is amazing to me because everyone was like, we're not going back to COVID lows. We're not going back to COVID lows. This is Amazon, for God's sakes.
Amazon's actually the first company to lose $1 trillion in market cap. Did you see that?
No.
I just saw that yesterday. Amazon's the first company ever to lose $1 trillion in market cap.
That's amazing.
I think Apple's going to end up losing $1 trillion in market cap.
Yeah.
And I could be wrong on that one, but I look at this thinking to myself, okay, so every investment's the present value of all future cash flow. If this has made sense to you so far, subscribe to the channel. This is what we do every single day. We make 2 or 3 videos. We have over 1,900 videos in our library on our channel. Go back and we don't delete videos. I think we've only deleted 3 or 4 videos, and there are very specific good reasons why we don't delete videos. We want to be held accountable. We believe in our future and our predictions, and we're going to be wrong. But a lot of times when we're right, we are really right.
This is amazing too. I just noticed this. So if you go and this is about $170 on the top side and $150 kind of down here on this bottom, and this is a 2-year period from right here to right here. And it kind of just stayed in that range for basically 2 years after everybody was saying Amazon was going to just go to the moon because they were the people that were staying at home and shipping products and this, and they're buying planes and cars and this and that. And here they are.
And eventually, guys, the story stops. It never goes forever.
Looks like the story's stopping.
To me, I look at it going, I can't wait for Amazon to fall further until it gets in my value range. The hard part for me is I don't know what that value range is. Right. They can't even make money at $150 billion in the busiest quarter of the year. I just look at it going.
And for the last couple of quarters with the most spending almost ever in this country.
And you're right. And they only make money off AWS right now.
Yeah.
It's been hard for them to make money on their shipping business and their retail business. So guys, this is where we stand. We're going to lay our cards out here. We talk very openly. We're going to be wrong. We're going to be right. Overall, though, our process does work. So if you like it, subscribe to the channel. You will not regret it. Thank you very much for your time.